Hello, everyone. Good afternoon. Welcome to this edition of The Final Bar. Today, we'll unpack Fed Day. Nice rally in the markets in the afternoon after the Fed announcement. We'll sort of break that down relative to the long-term trends. We'll also talk markets with my guest, Joel Elconin from Benzinga Radio. Hear from John Murphy about support and resistance levels. We'll also have the popular mystery chart and the 3 and 3. Ladies and gentlemen, this is The Final Bar. Hello, welcome. This is Dave Keller, your host for The Final Bar. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks so much for joining us. Really appreciate it. The point of this show, as you know, hopefully those of you that have been joining us for the last couple of weeks as we've gotten this off the ground, it's to take a look at the short-term action of the trading day today on a Fed announcement. Obviously, a lot of movement, a lot of fluctuations. Also, you have earnings that are providing plenty of catalysts. So, it's understanding the short-term movements, what stocks are moving, what themes are emerging, but also how to connect that to the long-term trends. And it's so easy to get caught up in the short term. We want to make sure that we have a proper perspective, right? The long-term perspective and how the trends are evolving over many, many days, many, many weeks and months chained together. So we'll look forward to getting to that, as well as a great guest today, Joel from Benzinga. Before we get there, I did want to remind everyone, we'll be speaking at the Las Vegas Traders Expo coming up end of next week. That's on November 7th through 9th down in Las Vegas. I'll be speaking Friday evening, a session called The 5 Modes of Mindful Investors. We'll talk about some of the behavioral biases that can get in the way of good decision making and how to build some routines to try and minimize their impact on your investment portfolios. So I'd hope you can join me there. There's a link on the screen. Take a look over there if you're interested. And also they have some streaming options if you're not able to get to Las Vegas. Certainly plenty of ways you can engage elsewhere. We'll also, just so you know, be broadcasting the Final Bar from Las Vegas next Thursday and Friday as part of that trip. So, obviously a big move today in the markets with the Fed announcement. You sort of figured there would be some movement relative to that. It's obviously a big, news event. Also plenty of earnings. So things like GE, fluctuating dramatically with earnings releases. So there are a lot of things to sort of unpack. A lot of the charts continue overall. I mean, broadly speaking, if you pick a random chart, looks pretty decent these days. Looking at the S&P 500, just looking at the daily chart, we've had this look that we've been looking at for the last couple of weeks, and we've sort of seen this stepwise motion and the low from early October, and then just that continued grinding higher. After that sell-off the first week in October, really just reversed and has just continued higher, almost unabated. So there have been random down days, but no real string of negativity. It's all been more accumulation than distribution. We now have the third straight day closing above the July peak, also the September peak. So, always when you have a big move, a big breakout, I always talk about confirmation, right? So one day is okay, but you always want to look for multiple days. And working with Tom DeMark years ago, he was always very big on confirmations, right? So a break of a level is one thing, but the confirmation, the follow through. So a lot of his techniques actually are built on some sort of follow through concept, right? Some sort of additional move that would confirm that initial momentum push. And that's seems to be what we're seeing today. Now, a lot of people would say, well, hold on, this was just a Fed. This is sort of an artificial thing. This is just a big announcement. And so the market rallied. So how can you really count that? You have to remember, you could argue that about this entire chart. It's all in some ways sort of artificial, driven by, Fed easing cycles, driven by a lot of different things that a lot of macro factors that can cause stocks to remain to go high and continue to go higher. So we're less interested in the cause and more interested in the effect. The point of charts is to look at the price itself and remember that is the best gauge of supply and demand, of fear and greed, and all those emotions that drive stocks. So again, the bottom line is stocks continue to go higher. The RSI a couple days ago, as we broke out, was right above 60. And usually in a bear market cycle, when things overall are weaker, you will see the market come back up to about the 60 level and then come down. That was one of the things in September, why this felt so much more negative than the chart actually looked, because things were rolling over, a lower high, the S&P or the RSI kind of peaking right about at that, bearish level on the upside and then kind of coming down. But since then, we've now chipped away higher. So it'll be interesting to see if the momentum continues stronger, if we get up into the overbought region. But boy, at this point, it looks like the trends are pretty positive. This is looking at the last 5 days of trading. As you know, I like to just look at this just to see where today's action fit into the last week. Here you can see the big rally after the announcements this afternoon. This is 2 o'clock, things start to come out, and then the press conference afterwards where Powell's sharing additional details and clearly some rallying after that. So the question is always what's priced into the market and what is not yet. And what it seems to be the case is between the announcement, which I would argue was certainly priced in already, his comments afterwards clearly are what have pushed stocks a little bit higher. Let's look one level down and start to unpack some of the themes that emerged today. So, again, on a big up day, if you look at the leadership, though, it was utilities and real estate. So as much as I would love to continue to signal the all clear, things are great, no problems, you still have this weird dichotomy of a strong tape, but strange leadership patterns, right? So something like utilities, real estate 1 and 2, something like financials or communication services, which I'd much rather see toward the top of the list, down at the bottom. So financials flat for the day. The XLF is a chart we've looked at a number of times over the last couple of weeks. And again, I had sent some comments around on Twitter about sector leadership and just thinking about some of the different sector themes that we've uncovered. And the chart of the XLF is one we referred to a number of times and looked at this resistance range on the XLF, from about 2850 to 2875, which lines up with all these peaks that you had. And again, if you zoom way out of your screen, this certainly feels like a huge continuation pattern, a huge base, a low surrounded by higher lows, almost a head and shoulders bottom type pattern. And it's broken up through that significant area of resistance. And arguably over the last couple of days has kind of pushed through that to the upside. But again, you would need to see something like the XLF continue to push higher and sort of break out in a meaningful way. And today, for example, you really didn't get that sort of breakout. You sort of had a middle of the road flat pattern while others had been rallying. I did want to highlight very quickly utilities. So utilities at the top of the list today on the 11 S&P sectors. Interesting to note that the XLU has actually pulled back to the 50-day moving average. So this is obviously something that historically, and I mean, if you look back over time, has been a solid relative performer, a solid long-term chart, especially when you incorporate the dividend component, which we're doing here, and now has pulled back to arguably sort of the buyable point, hitting the 50-day, hitting support just above 63, and then rallying pretty good to start the week here. So if that sort of pattern, this could potentially be a what you'd consider more of a buyable pullback within a longer-term uptrend. A lot of individual names that have had movements. We have Facebook coming up now today after the close here. So tomorrow we'll have to go through some of the other FANG names and how they've evolved since earnings. But do me a favor and take a look at the Scooter reports, especially ones that are up and down the most. Some names, some new names on here, things like Tiffany that are more buyout stories that are on here, but a lot of names that have not necessarily been on the stronger list that are starting to emerge. So I'd encourage you to take a look at some of the themes that have played out there and see which names we want to pay attention to. So that's the recap for today. And again, there's so many big picture things. I'll be very interested with our guest, Joel Elconin, to sort of unpack what he's seeing with the broad market environment, where he sees things from here further past the Fed day. Next segment will be the mystery chart. We like to do this with some regularity, show you a chart, cover up the tickers, and have you guess what this is. As a reminder, the way you can guess is go into the chat room that's on the StockCharts TV window. Put in any guesses you have, just put a ticker or whatever you think it might be. My only clues are this is something that is traded in the U.S. It's listed on a U.S. exchange. Note the price at the top and how it's, potentially putting in a lower high. We'll have to see how things play out, but especially the relative performance at the bottom, which has been consistently negative and just in the last couple of weeks breaking to a new relative low for the year. So an interesting one. If you have guesses, again, put it in the chat room and we'll take a look at it. With the next segment, we like to do a Talking Technically segment where we take some of my fellow StockCharts contributors, get their guidance on how they use some of the tools in the technical toolkit. I want to draw today on the great John Murphy, who's a longtime StockCharts contributor, really the chief contributor for us. He caught up with us recently talking about support and resistance levels, how he thinks about them. It's probably one of the most important things you can pay attention to. Let's hear from John, and we'll come back and sort of debrief on what he says. Here's John Murphy.
I'd like to talk to you about support and resistance lines today and how I use them to determine maybe when a market's gone too far, maybe due for a pullback, or maybe due for a rally. And I'm going to apply this to the stock market. So on this chart here, for example, this is daily bar charts, okay? You can see during this period of time here, we had a period of falling peaks and troughs, which defined a downtrend. And then the market started to rally, and it's been in a very strong rally mode for about 2 months. But it's reached a very critical spot marked by these two red arrows. Anytime the market is in an uptrend and it reaches a very prominent previous peak, that's normally a spot where traders start to look to take some profits. They look at charts the same way we do. And you can see, for example, that this rally right here, it's 26,200 on the Dow Industrials. If you look back, that was almost the exact level that was hit 3 or 4 months later. Actually, it was 26,300. So very, very close. So a lot of traders are looking at that to see what the market's going to do when it moves up across that red trend line there. And I drew in the red circles there because it's a little bit of a danger area. So the market's rallied a little too far, a little too fast. It's become a little overstretched on the upside, or to use a technical term, a little overbought, and it's right up against a significant resistance area. If the market is going to fail, or at least go into a consolidation or a pullback of some type, this is the logical spot for that to happen. And that's why we look at support and resistance levels.
So that was our good friend John Murphy talking about support and resistance levels. I mean, it's so cool to hear someone like John just at his computer talking through how he looks at charts. I wish we had that opportunity with so many giants in the industry like John. But if you listen to what he said, I think it's really important. The way we tend to talk about support and resistance, the way I describe it to people is, we always start with the final bar, which is that last bar on the far right side of the screen, and then look to the left. And where are we at relative to where we've been? Are we near any significant support or resistance levels, any levels that have meaning? Facebook comes to mind right now. This is the chart of Facebook going back for the last year. We have clear resistance around 192, 193, clear support from Fibonacci retracements. Also 175 has been a level before. So now as they report earnings, one of two things happens. It's not going to stay sideways forever. Either we break above resistance, we break below support, or we continue to use those levels. But seeing where we're at and how we interact with those levels is so, so important. So, again, I always coach people, use your charts not as a picture, not as a painting, but as a workbook, as a notebook, as a way to capture the trends and the levels and your comments that are going to help you remember what you were thinking on certain times. That's how you develop good routines and develop a good technical approach over many, many moons. We're going to take a quick commercial break. We'll be back with my guest, Joel Elconin from Benzinga Radio. I'll see you in a minute.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
Hello, everyone. Welcome back. This is your host, Dave Keller, Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us on the final bar. And thanks now to our guest, who I'll bring on, Joel Elconin from Benzinga Radio. Joel, welcome to the show, my friend. Thanks for coming on.
Thank you, David. I must say I'm quite honored to be following the the godfather of technical analysis, John Murphy.
I did not prep you that you were coming right after John talking about his
Murphy,
toolkit. So the two of you are now yin
I'm
and yang
nervous
sharing
now.
your
Now I'm
toolkit.
sweating and everything. You got me all nervous.
No, you have plenty to share. I know from, and again, it was a joy to come on your show recently. So thanks for returning the favor here. We have a chart of the S&P 500 up. I talked earlier just about a market breaking to new highs. What are you seeing here? How are you thinking about the current market environment?
Well, I mean, there's no resistance, right, David? When a market's making new all-time highs, there's no pain, right? There's no sell-off. So very hard to pick a top in the market, even though I've been known to try and do it on occasion here. I like to do my levels and look like the average daily ranges to try and get a feel for targets. We're right around 27 points in the S&Ps today. We were a little bit below that. But, market is definitely consolidating near the highs of the move, taking out the highs. So it's hard. I mean, I'm not going to attempt to pick a top here. There's a lot of good things, good earnings in the markets. People heard what they wanted to from the Fed today, right? Rates are, they were a little bit tepid, but rates aren't going down or immediately going down, and they're certainly not going up for, anytime soon.
Right. So, in an environment where you have things that just keep going up, and we've phrased this a lot of ways, like don't confuse, brains with the bull market and things like that. When everything's going up, how do you, what do you do with that? How do you identify is there a line in the sand? Do you become a trend follower if you haven't been already, or what do you try to do to identify when something like this runs out of steam?
Well, I guess it depends on, what portfolio, you're talking about. With 99.9% of my money, my portfolio, I do nothing with it. I don't try and time it. I don't look at it. Very conservative investments, a lot of them index based. I find it very hard to beat the market. So from a long-term perspective, I do nothing, and I don't try and pick tops because it's very hard to do. From a shorter term swing day trading perspective, I will at least wait for a double top or a triple top or a pair of closes in the same area. What I find is that the institutions will gang up at certain levels, and they're the ones that make the charts. So I will wait for a double top. I mean, talking about technical analysis, I like to keep it simple, stupid. If I really feel like I need targets on something for a day, I will look at the 9-day average trading range and use that as a potential target. But that's pretty much. I try and keep it simple, stupid.
Keep it simple. Now, we talked just before we came on the air about Facebook, obviously reporting after the close. It looks like it's up pretty decently in the after hours, up 3 odd percent. So up, 194 or so. I have the chart of it up here. So we sort of, if that holds into tomorrow, we're above the previous range. I mean, how do you think of something like Facebook? It's obviously been range bound. It's been kind of a yawner for the last 2 months. Is this enough if we break to the upside? Is that enough to push it out, or how do you address a name like this?
Just real quickly, a nice beat on the top and bottom line, 212 versus 191, and then a slight beat on the revenues. To be honest with you, after watching that Zuckerberg testimony, has nothing to do with technical analysis. I'm a little bit tepid on the stock, and I did not want to short it going into the report. Because, they've had a great history of beating. But my focus will be, as of right now, you have a pre-market or an after-hours high of 196.45. We backed $3.50 off that level. So I'll be keen on that tomorrow. If we can barrel through that 196.45, close above 200, then I'll be looking for a move up to new all-time highs. But for me being a contrarian here, I'm kind of looking this as a little bit of a shorting opportunity.
Right. Very interesting. So just because we have just a minute left, just because it's the first time on the show, I'd love to just, could you talk very briefly? I mean, where do charts fit into your process? How do you think about it? And do you have a disciplined way, a consistent way that you tend to go through what you're seeing on the charts?
I go through charts and the levels the same way every day that I've been doing for several years. And it's, I'm old-fashioned guy. I like the pivot points, pivot point formula. To get your daily pivot, I look at weekly pivots and also quarterly pivots for numbers, and then daily highs and lows. And then the more you get, if you get, for instance, tomorrow, if Facebook, I wouldn't call it the double top because it was after our session, but I keep it very simple. I do my S&P levels as soon as they close at 415. I have the sheet in front of me, and I do the best to follow it during the trading day, but nothing fancy, David.
The best thing you just said, Joel, and I swear I did not feed you this, but thank you for answering this way. You kept it simple and you kept it consistent. And that is one thing I've found, especially with people getting started. They sort of bounce around to a lot of different things and don't have a really consistent process. So that's a really, really good takeaway, especially for newer traders, newer investors. So thanks for saying that. Listen, I really appreciate you coming on. I know you are a lifelong Michigan fan. As you know, I'm an Ohio State alum. It's so good we can come together in the spirit of StockCharts and harmony to talk markets. So thank you, my friend, for coming on the show. I appreciate it.
Go Blue.
That's it. Joel's off the show. That's it. It's done. No, pleasure to have Joel. And Joel's from the Detroit area. I had a really, really good time talking with him over the last couple months, and pleasure to have him on. Boy, it's really, really cool on the show to have a lot of different people sharing some of their approaches, sharing what they do. So really appreciate it. Now time to revisit the mystery chart. Have any of you guessed what it is? Let's see. We have guesses of the XLF, the financial sector. Good guess. Incorrect. The Canada ETF. Well done and correct. That is the XLC. This is the Canadian ETF. Those of you that are in Canada, you might be used to looking at like the TSX or something a little different. So apologies for that. I tend to use the the iShares country ETFs only because for a U.S. investor, that's sort of the way that most people tend to access those markets. So I tend to look at things that way, but visually it's going to be very similar. The currency effect is what kind of causes some differences. So it might have been a little disorienting, but that's certainly what it is. So good guess for a number of you. I think this is an interesting one. I might have shared this yesterday, but I tweeted out a picture of all of these markets. These are basically the key global ETFs, regions, and then individual countries. And what strikes me as I look at this page is there's very little that looks bad. And I would argue nothing on here looks bad. Things look really good, like Japan or Taiwan. Things look pretty good, like let's see, China, potentially breaking new highs, like Canada, I would put in that bucket. And then things that are starting to emerge that aren't quite there, but don't look horrible. And so again, as a thinking about the broad equity markets and potential strength, I think that's an interesting thing to keep in mind. What I think is really crucial, especially if you're looking at non-US markets, is paying attention to the relative strength. So, again, this is based on a US investor taking a shot at something like Canada and doing it relative. I'm just going to adjust the relative here relative to the spiders, which will take the total return version. That's going to be a better way to do it. Sorry for that. Number's going to look a little different. Yeah, I was going to say, so once you sort of make the adjustment for dividends, so this is down 3.6% over the last year. That started from the starting point just end of October of last year, but breaking to new relative lows. And I think that's an important thing to remember. So even though the price itself isn't bad and it's recovered okay, arguably we have a lower high here around 29. We'll have to see if this is just a pullback and we break above 29. That would tell you the short-term trend is continuing. Or, if this is we've now established a lower peak, and if we would break down through the 50, I think that would confirm that type of pattern. But what's really noteworthy is the fact that it's been an underperformer. So again, as a U.S.-based investor, there's not a lot of incentive, I think, at this point. And really for the last, 8 months, if you look since the run, after the U.S. market low beginning of, or end of December into January, Canada actually emerged really quickly out of those lows, much more quickly than the spiders did. But since then, it's been sort of the steady pattern of lower highs, lower lows, and the relative strength. And I think out of all the things I've just mentioned, that is the most important thing to pay attention to, is that relative strength line on some of these ETFs. So again, it's a little bit, maybe, gives you one message if you look at this and you say, wow, overall, a lot of things are holding up okay. That's totally fine. China, for example, is one that, just broke above this trend line resistance, has now come right back down through the 200-day moving average. So again, until it can eclipse those levels, it's really not something you want to take a shot at left. When we talked about earlier in the week on Monday, we'd sort of gapped above the trend line, but had not broken above price resistance around 42. I think that's what would need to happen for it to go higher. But the relative strength line is what's most concerning to me, right? So if those relative strength lines on some of these ETFs continue to go lower, all that's telling you is you're really not getting paid as a U.S. investor to go to some of these international markets. Now, that is not a global phenomenon. That is not 100% true. So here, for example, we have Japan. One of my guests last week was talking about Japan and a potential breakout and how to think about that. So, looking at parts of the world are actually doing much better. So over the last 3 months, you've actually done pretty well owning the EWJ versus the spiders. You've outperformed by 5-6% over that period, which is pretty decent. That's not too bad. So again, with a lot of these patterns, I would look at price, but this is one of those times when I think it's really crucial to look at relative strength, because by using the US ETF, by looking at relative strength versus the spiders, you're taking, including the dividend component on all of that, and you're also taking the currency impact out and just focusing purely on, what it means for you in dollars owning some of those other markets. So certainly something to pay attention to. So congratulations for those of you that picked Canada. You're absolutely right. As you know, hopefully if you are looking at the Canadian markets, or if you're interested in it, we have a lot of data on Canada. I would say besides the US, that's probably the next market that we have a ton of data for on individual names and sectors and so forth. So take a look around the product for that. We're going to finish off now with a 3 in 3. As you hopefully know by now, at the end of every show, we like to look at 3 charts in 3 minutes and hit you with a couple themes that, if you're not aware of them by now, I hope that you certainly are. And again, these are the types of charts I hope you can recreate, put them on a chart list, and keep referring to them. Watch how these things evolve, because I think that's going to help you understand the markets in the coming weeks and months. So the first one today is just a long-term market trend on the S&P 500. This is sort of this is the first chart that I look at in my weekly process. It's a version of this is the thing I look at the first thing every day, and it's just to make sure that I prime myself by thinking about the long-term trend. Again, we said at the beginning of the show, it's so easy to get caught up in some of the short-term fluctuations. You want to remember to stay focused, stay geared to the long-term trend. And this is using the 21 and 34-week exponential moving averages. You can see since the beginning of the year, since February, those have been positive, have remained strong. And so as long as the price is remaining above 2 upward sloping moving averages, the trend is up, and that is undeniable. And that's what we're seeing. What's interesting here, the reason why it's on our list right now, is because this is the weekly PPO, which is kind of like the weekly MACD, and it just is giving a buy signal based on this week. We'll have to see again how the week completes and see if that remains on there. But if the week ended today, that would be a buy signal telling you that the short-term trend is also confirmed to be higher. So the long and short-term trend in agreement, going positive. Second one is looking at stocks versus bonds. Obviously, on a Fed day with Joel, we talked about just thinking of the Fed and the reaction to the news. And again, I think charts are a great way to do this. I would point out the spiders versus TLT. This is the stocks versus bonds ratio. So if this is going up, it's favoring stocks. Going down, it's favoring bonds. And it's just based on those 2 ETFs. I accidentally put a red arrow there. Sorry, that should be green, suggesting or indicating that since the second week in October, the trend has totally reversed, favoring stocks over bonds. It's right at the 200-day moving average, which a number of times has been where it reverses. So, but at this point, boy, you see the TLT breaking down, you see the spiders going higher, certainly seems to keep favoring the S&P stocks over bonds. Finally, I wanted to finish with an individual name. This is Leggett & Platt, ticker LEG. This is in the consumer discretionary sector. This is now the number 1 stock on our proprietary scooter rankings, the StockCharts technical ranking. On your member dashboard, you can see all the details behind that and see what names are on there. But I always like to focus on what the top names are, those top 10. And we have a new number 1 stock, after a couple big up days following through with nice news, nice earnings win and continuation higher. Extremely overbought. And the reason why this is an interesting one, it's a great lesson from what I have seen over time, is when something becomes extremely overbought with an RSI above 80, that means the momentum is so strong, you'd usually expect a little pullback and then a continuation higher, similar to what we saw in February. So what this tells you is we've gotten very overheated. We could pull back, but boy, more often than not, the next leg is going to be up on a stock like that. That is our show for today, Wednesday, October 30th. I want to thank you all so much for joining us today. As always, you can get questions to us at any point. The Final Bar at StockCharts.com. Also get to us on Twitter at FinalBarSCTV. We have mailbag segments a couple times a week where we gather some of those questions and address them on the air. So please shoot some comments there. For StockCharts.com in Redmond, Washington, this is Dave Keller. Have a good night.